Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christchurch Radio with Ayodeji Ibo, an investment professional. This week, we will be reviewing Nigeria's full year 2022 capital importation numbers recently published by the National Bureau of Statistics. Capital importation is grouped into foreign direct investments, which is an investment made by a firm or individual in one country into business interests located in another country. Foreign portfolio investments, which is the purchase of securities and other financial assets by investors from another country, and other investments, which is mainly trade credit, loans, and currency deposits. A certificate of capital importation, CCI, is issued within 24 to 48 hours by a Nigerian bank to the foreign investor when an inflow of foreign capital, either in form of a loan or equity or goods, comes into the country. The primary purpose of the CCI is to guarantee access to the official foreign exchange market for repatriations of capital and returns of investments, which are dividends, interest, and capital on divestment. This simply means that when the CBN knows that a foreign investor officially brought in money into the country for investment purposes, the CBN would also provide USD for their exits. The total value of the capital importation into Nigeria stood at $5.3 billion in 2022. That is a 20.5% year-on-year decline when compared to $6.7 billion in 2021. A further breakdown shows that the foreign portfolio investment, FPI, accounted for most of the capital imported in 2022 at 45.8% versus 50.5% in 2021. Total FPI moderated to $2.4 billion in 2022, down by 27.9% year-on-year from $3.4 billion in 2021. The decline can be attributed to CBN's prolonged capital control, which is a restriction of the flow of FX, measures and lack of clarity in the FX environment despite attractive yields in the fixed income space in 2022 compared to 2021. Still on FPI, investment in money market instruments, largely treasury bills, OMO, accounted for 57% of total FPI. Due to the improvement in the yield environment, investment in bonds rose significantly by 73% year-on-year to $980 million in 2022 from $964 million in 2021. Moving on, the inflow from other investments dipped marginally by 7.6% year-on-year from $2.6 billion in 2021 to $2.4 billion in 2022. Loans accounted for 25.6% of other investments, was down 2.8% year-on-year in 2022. Loans are mostly advancements by a foreign parent company to subsidiaries or foreign investments in Nigerian companies in the form of debts. Foreign direct investments, which is more long-term in nature, was down 33% year-on-year from $698 million in 2021 to $468 million, which is the lowest it has been since 2013 in 2022. Despite the huge consumer market, Nigeria continually fails to attract FDIs due to its unattractive business environment. Unfortunately, FDI, which is the most productive segment of the capital importation, has continued to thin out. By sector, investment in the banking sector topped with a proportion of 39.2% of total capital imported in 2022. This was followed by production and financing with 17.8% and 14.8% proportions respectively. As assessments of Nigeria's capital importation by source shows that the UK topped, accounting for 51.9% or $2.7 billion of total capital importation. This was trailed by South Africa, 8%, Singapore, 7.9%, the US, 5.4%, and the United Arab Emirates, 5.3%. By state, Lagos still ranked the highest in 2022 with a significant 67.8% share of the total capital importation, followed by FCT with 30.6%. This implies that Lagos and Abuja accounted for 98.4% of the total capital importation in Nigeria. By banks, Citibank Nigeria Limited, 27.6%, Standard Chartered, 25%, and Stanbic, 15.1%, all accounted for 67.7% of the total capital importation. The latest capital importation data confirms that CBN's restrictions on FX flows and the practice of multiple FX windows, high insecurity, and policy inconsistency continues to be significant barriers to capital flows. Nigeria needs to review its trade and FX policies to considerably encourage FDI and boost economic growth given the revenue constraints of the federal government. The new administration needs to provide an enabling environment and regulations that protect foreign direct investors and their investments in Nigeria. FPI is also required to increase FX liquidity for the economy. However, considering tight financial liquidity in the face of rising interest rates across the advanced economies, we expect FPIs to stay away from Nigeria. We can start to expect better FPI when there is more clarity around the FX environment. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.